Good afternoon, everyone. Uh, Welcome to today's webinar, where we're going to discuss on the some of the latest incentives that are going on in the proposals today in Senate. At the same time, we will also discuss, about Main Street Lending Program, which has been, implemented by Treasury from now almost 4 weeks. We'll talk about some of the common Q&As and common questions. To ask questions to this webinar, there is a Q&A section. There is also a chat window. You can ask questions on any of those. And I will keep answering those questions as we go live. Also, please note down the phone numbers right now on the presentation in case if you have more questions or follow-up questions, you can email to either of these email addresses or call on perfecttax.com. At the same time, you can also technically discuss with us on, if you need any assistance from Perfect Capital side, which is a perfect tax initiative. And I'm presenting myself as a group CEO of Perfect Group of Companies. And a lot of people ask me, what is Perfect Group of Companies? So Perfect Group of Companies predominantly is made up of, Fun Asia, Perfect Tax, Fun Movie Grill, Perfect Capital, Tucker Developers, Fun Pizza Kitchen. And so we are in three different verticals: real estate, media and entertainment, and consulting. So I act as a group CEO. Vaishali acts as a CEO for Perfect Tax and Perfect Capital. So when you email, if you need any questions, you can either ask for Vaishali, myself, or any team member, and we'd love to help you. Again, anybody has a question, please click on Q&A section or a chat window section at the top, and you can ask these questions. We are also live on Facebook, so I would strongly recommend my team to keep monitoring Facebook questions. If anyone has questions on Facebook, please put your questions on your comment section, and we will try to copy those questions on Q&A section here. Or this is also live on FunAsia's Facebook page, at the same time Perfect Tax Facebook page and groups as well. So not wasting too much time, again, I appreciate everyone joining this afternoon. It's 1st of August. I really appreciate that. My name is Sam Tucker, Group CEO, Perfect Group of Companies. And our goal today is to educate you and leave you with something interesting information. And at the same time, help you if you need any assistance in reference to any of those things. Halfway through the session, I would post a poll. Please, that poll is very important for us to continue improving our seminar, our webinars, and also helps us make changes on what would you like to hear and what are the things you like. So please give your comments on Q&A section. That's very, very important. We will get started again today with the basic things about Main Street Lending Program. Towards the end, I'm also going to discuss what is in proposal today as far as additional PPP is considered, or second round of PPP is considered, or EIDL is considered. So I would discuss more about that towards this thing as well. And what the current presentation today, there are two proposals today, one from House and one from Senate, which is what is the difference between them, which is the HEALS Act and CARES Act. CARES Act was proposed by Democrats, and the HEALS Act and HEROES Act. HEROES Act was proposed by Democrats, and HEALS Act is proposed by Republicans. I think they're going to continue the debate, and hopefully in this coming week we should have more clarification as well. So without delay, let's get started. Again, I appreciate everyone joining us this afternoon in the webinar. The Main Street Lending Program and PPP and EIDLs were EIDL for coronavirus was introduced on April 30th, 2020 by Federal Reserve. It was part of CARES Act, and Federal Reserve is implementing the Main Street Lending Program. The primary intention of Main Street Lending Program was to boost liquidity for small and medium-sized businesses by $600 billion. Funds were invested by Treasury, and it was part of the CARES Act. Purpose of the loan primarily was to see how the loan could help medium and small sized business to avail the credit in this challenging time. And because the small and medium sized business are foundation of US economy, and they technically make up for the majority employing section. They employ the most employees in this group of you know employment in US. Who are the eligible borrowers? Who can borrow money from Main Street Lending Program? Any business that was established prior to March 13, 2020. Another thing is, should be an eligible business according to SBA definition. It meets at least one of the following two conditions: has 15,000 employees or fewer. This is our fourth series of webinar, and we continue adding more webinars about different topics. Next week, we are going to predominantly focus on the proposal, if it is already approved, on how the new stimulus package could help individuals and businesses. And we would also cover and create a comparison between slide between Main Street Lending Program, PPP, and EIDL. What could be the usage allowed for all of these three programs? What kind of things you can use this money for? So make sure that every week we have some additional information. Every week we have some additional, information than the prior week of what's going on in the market space, how bank is looking for, what banks are looking for Main Street Lending Program, and what are the new things that are coming up from Washington. For someone to be eligible for Main Street Lending Program, you need to have fewer than 15,000 employees. So anybody who has less than 15,000 employees are eligible. Has 2018 annual revenues less than $5 billion. So majority of people on the call today should be eligible. If you have a small business, Main Street Lending Program is, good news is that Main Street Lending Program is a great tool for you to avail and take advantage of. Was created or organized in United States under the laws of US government, and significant, the companies have to be created in the United States under the laws of United States with significant operations in many of its employees based in the United States. So that is another eligibility criteria requirement. Also, you should have not availed the primary market corporate credit facility, which is another program that was created to avail MSPLF, MSELF, or MSNLF. MSPLF, ELF, and NLF are the Main Street Lending programs. You could technically still take money from PPP and EIDL to be eligible for Main Street Lending Program. These are the three programs as part of Main Street Lending Program, which is the way government tries to create the liquidity for $600 billion. The minimum loan amount under new loan facility is $250,000. Priority loan funding program is $250K also, and Main Street extended loan program or funding program is $10 million. The maximum loan amount under new loan facility is $35 million, MSPLF is $50 million, and MSELF is $300 million. How do they determine the loan? The loans are not given directly by the Treasury or SBA. Loans will be dispersed by banks, and they will go through a proper underwriting process of bank. So they are going to go through a proper underwriting process of bank. Loans cannot exceed 4 times EBITDA. MSPLF loans cannot exceed 6 times EBITDA. And MSELF loans cannot exceed 6 times EBITDA. A lot of people ask me what EBITDA really means. People who don't know what EBITDA really means. EBITDA stands for earnings before interest, tax, depreciation, and amortization. So for LLCs and S corps, pass-through entities, there is no tax. You're not paying taxes because those taxes are paid at personal level. Depreciation is added back. Any loan interest paid is also added back. And amortization mostly is for non-cash assets like goodwill. So if you have purchased this business a few years back, or you have goodwill sitting on your books of accounts, then you have to add back the goodwill also to calculate your EBITDA. In order for you to qualify for new loan funding program, your minimum EBITDA required is $62,500. In priority lending fund program, the minimum EBITDA required is $41,667. And extended loan funding program, the minimum EBITDA required is $1.6 million. Loans could be secured or non-secured. It all depends on the bank, because banks are underwriting this loan and they have to follow this process like a traditional loan is. As per Main Street Lending Program, you have to follow the traditional process of underwriting. So if you were to apply for a working capital loan, the same underwriting standards and principles are applied. In Main Street Lending Program, banks can reject your loan if they don't feel like that you are a good candidate for funding. The new loan funding program, you cannot refinance your existing debt. In a priority loan funding program, you can refinance your existing debt. Extended loan funding program, the same thing. Again, people who have recently joined, if you have questions, please ask your questions under Q&A section. If you're on joining us on Facebook Live platform, please ask your questions on your comment window, and Vidya from our team will monitor that and ask those questions here on the webinar. And the extended loan funding program, it is $1.6 million. What is the maturity of these loans? All of these loans mature today at 5 years. Now, I have been hearing that today they are lending based on EBITDA, but they could be changing that to lend based on asset also. That is particularly advantageous for companies who own heavy real estate, or assets. So that could be another mechanism. Today that mechanism is not approved, so we have to go based on what is approved today. The repayment loan terms is 5 years on all three programs. Prepayment penalty, there are no prepayment penalties. Principal payments are deferred for 2 years, and interest payment is deferred for 1 year. And the second year interest or first year interest payment is capitalized, because first year you're not paying interest or principal. Principal amortization, the way you pay that money back, principal loan payment is made back. At the end of third year, you're paying back 15%. At the end of fourth year, you're paying back 15%. And at the end of fifth year, you're paying 70%. The loan participation, 5% participation is from bank, 95% participation is from Federal Reserve or US Treasury, and they are implementing this program through Boston Federal Reserve. Eligible borrower will pay required fees of the bank and will also pay extra fees required for the perfect capital. They are all one-time fees. Typically, they run in range of 1% for the bank and 1.5% for perfect capital. But these are one-time fees. So if you really see over 5 years, is 0.5% or a year. The interest rate is LIBOR plus 3%. What that really means is you have to take a 1 month average of LIBOR rate or 3 months rate, and the loan program interest rate is whatever that LIBOR rate is plus the 3%. Today, based on that, the average LIBOR rate plus the 3% would come to about 3.5%. What is the key difference between PPP program, IDLE program, and Main Street program? PPP program was 2.5 times your average monthly payroll for 2019. Now, people who know that very recently HEAL Act has been proposed, and they also are following the same standard, which we also call second round of PPP program. IDLE program is based on cost of goods sold and revenue, versus Main Street Lending program is based on EBITDA. The PPP program, the forgiveness, the amounts are forgiven if they are used for allowable expenses. In EIDL program, the grants there was a component of grant from $1,000 to $10,000, and that you don't have to repay. Main Street Lending program, there is no forgiveness. You need to understand this is a loan that you have to repay back. The repayment terms from PPP loan, if you do not use for allowable purpose, it is 2 years to 5 years. IDLE program, the loan repayment terms is 30 years. Main Street Lending program, the repayment terms is 5 years, as discussed earlier. Interest rate for PPP program, if you are not using for allowable expense, is 1%. EIDL program is 3.75%, and Main Street Lending program is 3.5 to 3.75%. If you do not know how the loan forgiveness program on PPP works, you should engage Perfect Capital and Perfect Tax. They can help you figure out what is your forgivable portion and work with your banks to get your loans forgiven. The loan portion payments are deferred for 6 months for PPP. EIDL portion is end of 2020. Main Street Lending Program, the interest is deserved for deferred for first year, and the principal is deferred for first 2 years. Every in PPP program underwriting was very simple. Every business was approved. There was a self-certification process. You approved and certify that the information you're providing is correct. EIDL program was a discussion of SBA. It was more like a black box, and SBA later on decided that even the loan, according to the way the law is defined, you get up to $2 million. But SBA decided that because of the limitation of the fund they thought they would have, they only gave a underwriting program was like a black box, and maximum loans were given 150K. Main Street Lending Program is a full discussion of bank. What do I mean by bank underwriting? Main Street Lending Program has a very exhaustive process of underwriting. It is like any working capital loan. Banks are supposed to use all the standards that they use for any ordinary bank loans. So they would ask you all the information, which includes the projection, the financial projections, the business projections, which also includes the last year's tax returns. If you have not filed a tax return for last year, then you need audited financials. So Main Street Lending Program, all the processes are very exhaustive. Process is like any working capital loan. Bank reviews business plan. Bank reviews owner's profile. Bank reviews future business projections and prospect. And then Treasury guarantees that or buys the paper. Again, would like to remind people that if you have any questions through this presentation, use the Q&A section on the top or use the section on chat window to ask questions. A lot of people again ask me this question: why use a professional help? Why use Perfect Capital versus self trying to do that? A lot of people tried filing the PPP programs and EIDL programs themselves, but they later on figured out that a lot of people today, I have a client whose 10 loans are rejected in EIDL because if he had used the correct help, he could have maybe avoided that. Same thing, a lot of people also got a lot of challenges on PPP program as well. Main Street Lending Program underwriting process is very exhaustive. Compared to both the previous programs, this is a much deeper, exhaustive underwriting process. If you've never worked on a loan, or if you don't know what a loan package looks like, then you definitely don't want to do it yourself. You want to engage Perfect Capital immediately. Number of banks. Not all the banks are participating. Very few banks are participating, unlike PPP, and EIDL again was a central authority like SBA. So it is very, very important. Possible due to extensive relationship, Perfect Capital. Additional application, self-application, not possible as bank will not take new customers for this. So we normally apply your PPE MSLP loan to multiple banks. Peace of mind. Experts are handling your case. In a self-application or self-applying that, you have to take all the stress on your own shoulders and on your own mind. Fees. In Perfect Capital's case, it's only paid if it is successful. So self-application, ultimately the costs are very high because one of the client tried the same thing with Chase Bank. He applied for it and he got rejected. Now we are working with him to help him apply for other banks. So it's very, very important to get, if you get rejected, then you just wasted your time and you not got even funds available for utilization. What business are ineligible to apply? The financial business primarily engage in business of lending. So if you're a bank, pawn shop, finance companies, then you might not be eligible for the MSLP program. Business owned by developers and landlords that do not use or occupy the asset. So if you're a passive investors of real estate, then you're also not allowed. Life insurance companies. Businesses located in foreign country. Pyramid sales distribution companies. Business deriving more than 1/3 of gross annual revenues from legal gambling activities. Business engaged in any illegal activities. Private clubs and business which limit number of membership for reason other than capacity. So you have one of the private clubs or business and you only take few customers, not because of capacity issue, but for different reasons, then there is a restriction that you cannot apply. Government owned entities. Business engaged in teaching, instructing, counseling, or indoctrinating religion or religious belief. Loan packagers, business with an associate who is incarcerated on probation, on parole, or has was indicted for a felony or a crime. Business in which the lender or CDC or any of its associate owns equity interest. Which, again, this what we are discussing is what business are ineligible to apply. Present life performance of any prudent sexual nature. Derive income from any products or services that are technically related to sexual nature. Business engaged in political or lobbying activities. Speculative business. Now, some of the common FAQs which I've actually captured here are loans that are originated or upsized in connection with the program forgivable? So no, Main Street lending programs are not eligible to be forgiven. I think there's a question. Let me see what question is. My brother is working on 1099 miscellaneous basic in 2019 and he started business in Feb 2020. Can he be eligible for PPP loan? Yes, he is eligible for PPP loan. This we are talking right now so far on Main Street lending program. Main Street lending program, he would not be eligible. Now, so far the business which are started in 2020 are not eligible, but they might add those things into the eligibility criteria later on. How long will the program be in effect? Originally, this program was in effect till September 30th, but now this program has been extended till December 30th for Main Street lending program. Is there a limit to the size of the program? So there is no limit to the size of the program. You are allowed to technically, take this program to the maximum level, and there is no such limit. The limits are what, $35 million, $50 million, or $300 million. Treasury has said that current limit is $600 million, but they might expand this limit. Which entities are eligible to borrow? Entities incorporated before March 13, 2020. I've also unmuted everyone, so if you have a questions, you can also ask me question through your microphones as well if you're participating. There's one more question on chat window. Let's take that. Yes, you can have recording of this webinar. If you go to Phanasia's Facebook page and follow the Phanasia's Facebook page, like the Phanasia's Facebook page, or even Perfect Tax page, all of these programs will be posted on that page as well. And they will be available on website as well, of perfecttax.com. Documents required. Documents required for Main Street lending program. You need profit and loss and balance sheet for 2017, 18, and 19. First thing, you don't need to collect all of them first. I would need 2019 to get started right away. Tax returns for the 3 years. Latest financials for 2020 till June. Summary of existing loans, if you have any, which includes non-recourse and recourse. Number of employees. Loan approved but not yet granted and its nature. Your business plan. How are you going to utilize this money? Financial projection. What shows that you can possibly make money and repay this loan? How is this business impacted currently in COVID situation? There's one more question. So Sandeep, yes, we would technically make this webinar available to everyone. I'm also posting a poll on this thing before I proceed to the next slide. Right now, please use this poll to answer some questions. It gives us an idea of how we can continue helping in this program. I mean, a poll should be live on your screen right now. So please help us, answer some of these poll questions. That helps us basically, improve your experience and how we can help you. Perfect Capital is here to help you through this program on how to maximize your benefits. So please vote on your screen. It really helps us. We work with your existing banker. We also check if you have multiple accounts. We work with multiple banks. We work with your bank manager to understand if they are already doing MSLP program. We collect documents. We calculate your EBITDA. We study your existing loan, we make application for MSLP, we complete the loan closing, and then obviously then you pay the fees. Now, a lot of people have asked me this question, so I'm incorporating this particular slide, which is a very interesting slide right now, going on into the market space, that what is the difference between Heroes Act, Heels Act, and the comparison between two. Heroes Act was passed by the House. Heels Act is proposed by the Senate, and there is a comparison between two, which clearly differentiates what is that. It's not approved, but this gives you an idea of what could be approved. So the act that was proposed by Democrats, they are proposing to increase the federal funding for Medicaid by from 6.2 to 14%. In Heels Act, which was proposed last week, they are not recommending any change in this area. In Heroes Act, what that really means is that Heels Act does not increase Medicare funding. This means millions will be unable to enroll in remain on Medicaid. Unemployment benefits. Heroes Act extends your $600 supplemental unemployment insurance through 2021, January 2021, versus unemployment benefits are reduced from $600 to $200 weekly benefit in Heels Act. What is the difference? Heels Act cuts unemployment supplemental insurance to $200. This means 32 million unemployed Americans will lose $400 per week. $1,200 one-time payment, $1,200 additional one-time payment to all Americans, $1,200 additional one-time payment, and $500 additional per dependent, same as CARES Act, will help desperate families across country as the pandemic continues. State and local budget desperately needing funding for essential services. $500 billion for state and $375 billion for local localities. As far as Heels Act, there is no additional funding. $105 billion is for education, most of it going towards helping schools reopen in September. Heels Act provides no additional funding for Medicaid, infrastructure, and public hospitals. For healthcare workers, there is additional $200 billion for pandemic premium pay. In Heels Act, there is no hazard pay. For PPE, which is protective equipment, Heroes Act expedites the production and distribution of PPE. They don't have any mention about Heels Act. In testing and treatment, $75 billion for testing, tracing, and isolation, versus Heels Act is $16 billion. Funding for hospital is $100 billion, $25 billion. PPP wise, there is an additional PPP round which was disclosed as a PPP round 2 for businesses who are below 300 employees. And they have to now justify and show that there is a revenue drop in 2020 in 2 quarters. My recommendation today again is, I appreciate everyone joining. Please contact Perfect Capital if you want to get started immediately. There is limited funding available. Contact us at info@perfectx.com or sales team at perfectx.com, or you can also call. We have experts available right now to help you get started with PPP, second round of PPP, EIDL, or MSLP. The number is 469-213-1519. Thank you everyone for joining this webinar today afternoon. I appreciate everyone joining, and we're looking forward to work with the community to help them maximize their loan programs. Thank you again this afternoon on joining on this Saturday.